It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
And welcome back. It's Tyrone Jackson, the wealthy investor. You chose a great day to listen. Actually, isn't every day really a great day? If you are like me, every single day, I take a moment, I pause, and I just think about what I am grateful for. And it's a great way to start off your day. You know, particularly if we live in the United States, no matter what your circumstances, there's always something to be grateful for. I have found that success really comes from what you focus on most. And when you focus on the things that are going right in your life, it's a great way to jumpstart your day. Well, this is episode 240, Investing with a Goal. Remember in episode 239 how I talked about using the stock market as a goal and not just a place to get profits from covered call writing and volatility trading? Well, here's one of the things that I love about being the wealthy investor. I love being the wealthy investor, by the way, but I love helping people. And I've been that way my entire life. And so now I get to do that. And people tell me stories of how they make $5, $10, $15, $20,000 a month consistently changing their life. And I love it. So there's a wonderful saying that I once heard, which is teachers always teach what they need to learn most. So generally, if I'm teaching you something, it's probably a lesson I'm learning at the same time. And when I'm actively teaching thousands of people a month, I get to see the results of what teaching methodology or message resonates the most. And then I bring that back to you. One of the things I've learned from teaching is that there's certain messages that seem to resonate with my students that increase their success. And teaching or trading with a goal in mind works really, really well. So today's session is all about what if you were trading for the down payment of a house, or you wanted to buy a second home, or you wanted to pay off your first home. How could you use covered calls, volatility trading, dividend collection in order to raise the money to pay off your house, buy a new house, or a second vacation home or condo? Now, as I take you on this journey, the one thing that I ask is that you have an open mind. Yes, there are people who have more than one home. Have you ever thought about it? I have more than one home. I like it, except, and here's where the wealthy people problems kind of show up, is sometimes I'm at one of my homes and I happen to love a particular brand of jelly. And when I'm just kind of puttering around the house, I'll put jelly on a piece of bread and then have a quick little snack. And sometimes I'll go to the refrigerator and I'll go, hey, wait a minute, I just brought the grape jelly. No. That was at the other house you were at 2 days ago. Now that seems like only a rich person would have to deal with that. But that's why I can start off each day with gratitude, because I have simple things like, wow, I need more jelly at my home in California. That's how you know you are doing well. That is for sure one indication to know that you are doing well. Okay, so if the biggest problem of the day is I need extra jelly, things financially are probably going pretty well. Well, let's say you wanted a second home, and I encourage you to have that. How do you get the down payment for that home? Or on your first home, how do you pay it off? And it goes a little something like this. We all know that holding stocks is part of what makes wealth. So no matter what investment you have, whether it's a piece of real estate or it's the stock market, you're going to need some time for that asset, home or stock, to appreciate in value. Now, if you're choosing great investments, they will accelerate at a faster pace over time. But if you're using covered calls and you're using the wealthy investor approach to invest in the market, really the amount of time you need to hit almost any goal is 2 to 5 years. Now, if the market is moving and rising faster, you won't need 5 years to get to your goal. In this particular instance, I'm going to assume that your down payment is $100,000. You're trying to raise or trade your way to $100,000 so you can cash in all those stocks, pay off your house, or use it as a down payment for your second home. How do you do that? Okay, well, I'm going to answer that, but the first thing I'm going to tell you is what you don't do, okay? Investing in cryptocurrencies, not a good way to save for the down payment of your home. For this reason, they don't have enough history behind them. So if I'm going to teach you to invest your way to wealth to hit your goal, I'm going to need some stocks that have a history of producing great results. Well, what's interesting is this takes us right back to what I call superior stock selection, right? So when I'm investing my money in a company, I want to have at least a 5-year period where the company has done well and is generating revenue. Now, in the Wealthy Investor Program, the first thing that we look at is top line revenue. How much money is that company actually generating on a quarterly and annual basis? Because I'm going to use that stock as kind of a form of leverage. I'm going to use the success, the financial success of that company to buy shares and build a position in that stock. Now, many of you are familiar with the idea of building a position. If you're not, this is how it works. If there's a company, ticker symbol XYZ for this illustration, that I really like, that is trading at $100 a share, I could start buying, let's say, 20 shares of that company. I would wait for the company's stock price to rise. In today's market, you're really waiting for about a $10 rise in the stock. And then you would buy 10 more shares or 30 more shares. The key here is that you don't go in and put all your money in a stock at once and just hope. You let the stock come to you. Let it prove to you that it is worthy of future investment dollars. So if I buy my first round of shares at 100, I'm waiting for $110. We call that a buy signal. I would then go in and buy more shares, and then I'd wait for 120, buy more shares, and then I'd wait for another rise in the stock to 140, buy more shares. Okay? So it's almost like a cake, and my buying patterns are baked in to this cake. So the more that stock rises, guess what? It's telling me to buy more. It's also telling me that those shares are in favor. Because what really makes a stock price rise? Institutional dollars. Without banks, insurance companies, or mutual funds, generally your stock won't rise. You see, the retail investor doesn't have enough money to make a stock go up 20, 30, 40%. Who does have that money is what? Institutions. Why? Because they're buying 1 million shares, 500,000 shares. And that it's those big purchases that really makes the stock increase in value. So chances are, if I'm getting $10 buy signals, there's lots of institutional money in the stock. So that's the first criteria. Number 2, I want to reward myself for building a position in these stocks by making sure that the companies that I am investing in to hit my $100,000 goal all pay a dividend. Now, what is a dividend? It's your share of a company's quarterly profits paid out every 13 weeks. So if I'm building positions to hit this goal, guess what? I'm also getting checks in the mail every 13 weeks. You see, success is nothing but a series of positive habits repeated over and over and over again. So I need, as a human being, to be reinforced with constant cash flow. And if every 13 weeks I'm getting dividends, I'm getting that reinforcement. Now, a lot of people take that reinforcement and just reinvest it into the stock market. Now, you can do that, but if you're using the Wealthy Investor's approach, you don't have to reinvest your dividends into the stock, because at some point you're going to take this account that has a goal on it and you're going to turn this account into an income generating account. So you are now generating income and reinvesting that. Okay? All right. So I wouldn't start off my new house account with cryptocurrency or something that was very risky, that does not have time working in its favor. I would start off with a position, let's say, in Microsoft. Why? Because Microsoft has 20 plus years of delivering top-line revenue, new product lines, and an increased dividend. Plus, they're a member of the Dow Jones Industrial Average, and that makes them lower risk. I could also, if I were going to add a second stock that I were building a position on, that would be Amazon. Why? Amazon has over 20 years of delivering top-line revenue and was just recently added to the Dow Jones Industrial Average. Now remember, I am putting money in every single month into my account, but only into stocks that are rising. The biggest mistake that I see people making is they gamble with their money in the stock market. Now, let me just point out two things to you right now. There are some newer trading platforms that prey on the fact that you don't really recognize your money inside your trading account as money. It looks like a video game or it looks like data. That design of that online trading account, some companies design the format, the layout inside your brokerage account so it looks more like an arcade game. They don't want you to really realize that this is actual money. Hey, let's buy some shares today of this company. In other words, they make their money through commission. They want you to trade. But when you have a goal, you are paying attention to the money that you're putting at work and how it performs. Starting to get the picture? Great. We're going to take a little break here, and when we come back, I'll tell you some more stocks that you would add to your portfolio if you're serious about wealth building and setting a goal. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
And welcome back. We're talking about using the stock market as a goal. And in this goal, you're trying to raise money for a new house or pay off your existing house. Okay, as I was saying before the break, notice the stocks that I've talked to you about so far really all pay a dividend, right? Well, you could also come up with the idea, well, Tyrone, I'll just do nothing but buy Dow stocks. Now, here's where the game requires a more elevated understanding. You see, I could add a company like Coca-Cola, ticker symbol KO, to my stock buying team, if you will, and add it in the mix. But Coca-Cola over the last 5 years has had weak performance. It hasn't gone up 100% or more. One of the methodologies that I really like is investing in companies that have seen their stock price go up 100% or more over the last 5 years. Now, that doesn't mean that the stock is going to continue to double every 5 years, but it is a good indication. Now, this is where your financial education really pays off because Coca-Cola has not had a serious share buyback over the last 5 years. And for those of you who know, because you're a member of WI Trade School, we love share buybacks because it shrinks the float. And when you're shrinking the float and raising the dividend, that is a setup for the market to buy more shares because the share buyback, right, and the increase in dividend makes the stock itself much more appealing. So like everything else in the world, if you're really about financial success, there are some methods that have proven themselves, right? Right. So we love companies whose shares price have gone up over 100%, and they're constantly raising their dividends and buying back their shares. Especially in this market right now, that's a lot of what's going on. So some people are buying companies and going, these share prices never move. Right, because the company doesn't have a dividend. it's not increasing its dividend, and it's not actively buying their shares back. So after you're familiar with this methodology, you say, well, what's the big deal? I know how to pick stocks, but you'd be surprised at how many people don't. There are also other slow-moving stocks, even though you recognize the brand name, they're not really going to help you at this time with your portfolio's goals. And one company I absolutely love, but is a slow mover on the Dow side is a company called Johnson & Johnson. Now, they make billions of dollars a year selling over-the-counter pharmaceuticals. Recognize the name, Johnson's Baby Oil, Johnson's Baby Powder, but when you look at how the shares perform, not your best performer in the Dow Jones Industrial Average or the S&P for that matter. So you want to know, A, where the revenue growth is, where the dividends are, and where the opportunity is for the stock to go up 100%. Explosive growth. If you stick with that pattern, you'll do very well over time. So I want to make sure if I have Microsoft and Amazon that I do not have Coca-Cola and Johnson & Johnson in an account where I have a goal. It's simply not going to help me increase the value of the portfolio. So let me say one other thing here, and I'll get back to the goal. There are basically in the financial world two different pursuits. The first is wealth accumulation. I'm trading in the stock market to create more financial freedom, or wealth preservation. I'm already wealthy. I just want to hold on to what I have, and I want to produce dividend income and growth in the portfolio overall. I'm not trying to blow up the portfolio. I just want to put my money someplace where the returns are respectable and predictable. Most of the people who participate under my tutelage in the stock market are looking for what? To accumulate wealth, right? To have exceptional growth in a 2 to 5 year period. I'd love to see them all graduate into wealth preservation, right? But the fact of the matter is most people are trying to get rich if you're listening to the show and you're following me on Instagram or Facebook or what have it, okay? All right. So we like Dow stocks, but we really don't like slow-moving Dow stocks because they're not right for our portfolio. Now, here's the other exception when you have an account that is growing. Every once in a while, you have to pepper that account, if you will, with a growth stock that's not in the Dow, but is maybe a well-respected software company, right? Because those companies are growing revenue at such an alarming rate, it's putting a lot of pressure on the stock to rise. We call that demand, right? So there are some people who make their fortune just investing in companies that are newer to the stock market but have high revenue growth. Now that takes a little bit more risk because if that company on one quarter has a down quarter, Wall Street will abandon the shares. Okay? Now, once your account gets to about $30,000 or more, and you're making monthly contributions to the account because you're saving up for the down payment, except you're using an investment approach to accelerate the pace of your savings, once you hit $30,000 or more, now you could start using covered calls, right? So now you can start selling 3-week, 4-week out-of-the-money covered calls to do what? To make income on that portfolio. The only problem there is that you are generating taxable income. So you don't want to use this account like your regular trading account. A little light covered call writing, pull in some income, and dividends become star of the show. Okay? So all you have to do is keep investing every single time there's a buy signal. So what are you trying to do? If you're saving up for a house and you can put $1,000 a month away, you know you're establishing a new position in this account, a new stock position almost every month. You're going to have between 5 and 10 different companies you're investing in. That means every month that you put that $1,000 away, you're going to have a buy signal somewhere, right? So in other words, I hit my threshold. I got 10 star stocks in my account. I'm ready to put my next $1,000 into the account, and I'm looking for a $10 buy signal. one of these 10 companies will have one, and that they'll say to you and your money, Tyrone, over here, buy more shares of me. You see how fast I'm moving? It sounds complicated, but when you actually take this approach, you'll see every single month the stocks that are pulled ahead, those are your winners. Those are the ones that really going to take you to your goal sooner rather than later. But let's look at the opposite side. Now I'm saving for the house. I've got my 10 shares and I'm ready to make my next $1,000 contribution. And guess what? None of the stocks have advanced. You would then take that $1,000 and leave it in cash. I know we don't say this enough, but the truth is cash is a position inside your brokerage account. You don't have to be all in all stocks all the time, right? You can have a certain amount of cash sitting there. So guess what? When one of those 10 stocks actually does make a $10 move, you now have cash to actually add to that position. Here's what a lot of people don't know about the stock market when it comes to investing. You always add to your winners. A lot of people try to balance out and say that stock is down from where I bought it from. I'm going to get it while it's on sale, while it's cheaper than what I initially paid for it. No, there's a saying on Wall Street that goes like this: a trend in motion tends to stay in motion. So if I buy shares in my account and they go down, no, I don't buy more. I stick with the winners. It's the same thing in life. People who have a winning mentality tend to stick around people who have a winning mentality, right? And then they do deals together. They share winning ideas together, winning thoughts. They go to winning barbecues. They have winning birthday parties for the kids. People who win tend to hang out in life with other people who win. That doesn't mean you have an inauthentic friendship, by the way. Just choose people who you really like, who are really successful. That way, you'll always be learning and growing. Well, in the stock market, it's the same exact thing. Always add to your winners, and you'll be what? Learning and growing. The only difference is you'll be building wealth at the same time and able to hit your goal. Now, it's almost time for me to get out of here with this particular episode, but I want to leave you with this, and someone out there will have a light bulb moment. If I have 10 star stocks in my portfolio and 2 of them split 2 for 1 in a 2 to 5 year period, what happens to my portfolio? Something magical. So now we have share stock splits, share buybacks, and dividends all working in our favor. If you don't have a financial education, it's time to get one. Stop watching all these 16-year-old boys on YouTube who will tell you you will make a lot of money trading. They're right. You will make some trades that do very, very well. But the difference is, here with the Wealthy Investor, you're learning how to build wealth permanently. I don't want just 7 trades that work every once in a while. I want financial freedom for the rest of my life, and I hope you do too. Hey, I'll see you next time here at thewealthyinvestor.net or right here at Trading Stocks Made Easy. I'm Tyrone Jackson saying, stay open, stay positive, because in your life, the best is yet to come.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.